With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
All right, welcome to the COB. I'm Juliet Sarli. Nice to have your company. Let's have a look at where the local market is finishing the day's session and not really going anywhere very fast. We've, of course, got the uncertainty over what is happening between Israel and Iran, but also we're awaiting the Fed decision tonight. So what sort of tone that Jay Powell is going to take? I was speaking to Tony Sycamore earlier from IG. He thinks we'll hear quite a dovish tone coming through as we await the outlook for future rate cuts from the Fed and, of course, the all-important dot plot as well. Let's get to the themes of the day then. So again, it really has been this cautious mood, and the other key focus for us here in a market that is very heavily weighed to the materials space is this drop that you're seeing in iron ore, iron saw as we call it. That is weighing on the likes of BHP. Fortescue, I think, down by something like 4%. MinRes off by about 5%. We've also seen profit taking hit the gold stocks that, as we know, have been on a huge tear. So that's seen the likes of Northern Star, Evolution slide as well. Boss Energy, though, and the uranium players have been positive momentum stocks today. And as I mentioned, the Fed very much in focus. The FOMC announcing its monetary policy decision at around 4 a.m. our time, I think. So I'm sure we'll all be setting the alarm. My director's eye is in my focus there, and I know he's got his alarm set for 3:55 to watch what Jerome Powell is going to say. Let's have a quick look at what we're seeing in terms of those stock movers. And I mentioned the weakness in iron ore really playing into those iron ore players. Fortescue down by 3%, MinRes off by 5%. Uranium, though, still very much in focus. An update from Boss Energy today as well, helping its share price up by almost 5%. Now, the energy sector, we saw crude oil jump 4% in the offshore session. Woodside coming off a little, down 1/3%. Ampol has been a stock that quite a few guests, and I just had Will Riggle from Climb Investment Management also say this, think could be a beneficiary if global oil trade is disrupted due to the refining margins that it has, and its share price was up by 3.1% today. In terms of the overall corporate stories, Boss Energy announcing it's met its full year 25 production guidance at its Honeymoon uranium mine. Shares up almost 5%, $4.65. NextDC shares are rising. They did fall earlier in the session, but they've tied up a new bank facility worth over $2 billion. Region Group there, it's going to distribute a dividend. Kelsian also in focus, and Bioxine in the small end of town, entering the German market with a $3.7 million deal. All right, let's welcome to the COB Mark Gardner from MPC Markets. I mean, when you've got the last 3 of the top 5 stocks there, not particularly big movers. We're in that kind of lull period, aren't we, ahead of reporting season, but we're dealing as well with all these geopolitical tensions.
Well, I think investors should be thankful because, 10 years ago, this market would probably be off by about 10%. So it's been incredibly buoyant given what's been going on. And I think, obviously, we've got, Juneteenth tomorrow in this state, so this, futures will be open, but the stock market's closed over there. We've obviously got the Fed meeting as well. And, I mean, Jerome Powell, poor fella's dealing with even more uncertainty. And obviously this spike in oil prices is going to be very inflationary. So as much as people are expecting a dovish statement, I think oil prices and obviously conflict in Iran and the closing of the Strait of Hormuz is really counteracts all of the deflationary news that we've been having in CPI and PPI numbers over the last few months.
So what do you think Jerome Powell's going to say?
I think he's just going to be very much the same. We have to monitor things, really. I think he could have easily been dovish, given that really poor retail sales number in the States last night. If this conflict wasn't going on and oil prices weren't, up at a good 15% in the last week and a half, I think he could have been quite dovish. But he probably just has to be a little bit careful because he doesn't want to go promising things he can't deliver. And given that it's just a foregone conclusion that at any opportunity he's out, I don't think he's going to be pandering to Donald Trump and the Republicans. So, and obviously tax cuts as well with the big beautiful bill, which I think that really is a form of fiscal stimulus as well. So. I'm a little bit concerned. I think the Trump administration has to get involved in the Israel-Iran conflict because the centrepiece of Trump's policy, obviously tariffs is inflationary, but that's okay if drill baby drill makes sure that the oil prices stay down.
Yeah.
So that really derails a very, very pivotal point of the plan of keeping inflation down. So I would say, he's been taunting and been very active on social media in the last 24 hours. I think he would probably come out with a fairly, bold Trump-like statement to try and bring it to a head very quickly to get those oil prices back down, because I don't think he's got a choice.
No, well, that's what he sort of went to the polls with, isn't it? Lower gas prices. When we look stock specifically, now we spoke a couple of times and you wrote about this in our newsletter yesterday as well, about the Defend ETF uranium stocks, but where else should we be looking? Is silver where we look now? Yeah,
well, we've been a long time, well, me particularly, while Jonathan's been in the gold camp, I've sort of been more in the silver camp, and the catch up in the gold silver ratio is starting to happen now. So we had a break above 35.50, which is a 15-year high, a couple of weeks ago, and it hasn't been back below those levels since. And I just checked as you were doing the intro there, we're at a fresh 15-year high as we speak. So when silver goes, it tends to play catch up really quickly, and there's a lot of nationalistic behaviour going on, particularly from Mexico, because it's been jilted by the US. It's where 25% of the world's silver comes from. And Jonathan had a couple of really good, Andean Silver was taken over, but he had a couple of great tips this morning for some junior miners that are coming into production. POL, I think, was one. It's in New South Wales. So it's very hard to get silver or any sort of quality silver miners. But when it's not like gold where it'll grind higher, it tends to break and then go, 30 or 40% silver. So I think it's up a good 15% in the last few weeks, and I would expect it. Most of the global brokers have got $40 plus price targets on it. We're at 37.30 at the moment. We'd probably expect that to continue higher as well. So in normal situations in geopolitical, silver actually gets sold off and as people switch to gold in the more safe haven. The fact that it dropped down very briefly when Israel's first strike, and then bounced back very quickly. That sort of price action when fundamentals should be pushing it down, I think is super, super positive. So I'll be looking out for that. ETP MPM is physical silver ETF that you can use in the Aussie market as well, if you don't want to play in the junior miners. But there's a bit of a lack of, if you've got access to US, there's a silver miners ETF, but you'd have to have access to the
we won't give them all away, but you can watch the trade, which is on our website with Jonathan. He had 3 companies that he thinks could be the next Adriatic, which he said was a 27 bagger. All right, now we are almost at the end of the financial year. What about tax loss selling?
I think the lion's share of it probably would have been cleaned out, I would imagine, through that April-May period. We got little bits and pieces, left over where, but we don't really have a lot, to be honest. I don't really see it having a major effect. I think there's much bigger issues at play here, and obviously with the amount of things that have been thrown at the market, from Liberation Day to tariffs to obviously Middle East conflict, etc. Is if you haven't done your tax loss selling by now, you probably have forgotten, I would say. So. I would fully expect, we've had a bit of a stable week and a half. We are coming into July, August, September are seasonally the 3 weakest months of the year. October usually grabs the headlines because it has the biggest drawdown day, a capitulation from those week periods. But I think September's the only, on average, negative month, and about nearly 60% or above 60% negative. And August is not much better either. So
Yeah,
probably
August.
not going to get much better in the next couple of months. And we've got those trade deals rolling around really quickly as well. That 90 days is gone away pretty quickly. And I saw today Taiwan has put some sanctions on Chinese tech companies buying their chips as well. So there's, Trump's sort of given permission to the rest of the world to start their own little trade wars. So I don't really see there being, much stability or a drop in volatility anytime soon.
Yeah, indeed. All right, Mark, always a good chat. Mark Gardner from MPC Markets. Getting back to the stock specifics, the stock of the day on the call was Karoon. Michael Gable from Fairmont Equities and David Novak from Wealthwise Education join Nadine in a technical special.
Broke above 170, there it is on the chart there that Michael's provided. That was a major resistance level, so that's significant. This would be a buy on any pullback. So it's a hold at best at the moment. I wouldn't be chasing it. I'd be looking for a slight pullback here. I'd be very surprised if it got back to 170, but anywhere between 180, 190 I think is a buy on Karoon. But look, the fundamentals are improving, especially with where the oil price is. They're unhedged. They produce, I think it's about 10 million barrels of oil.
The amount of money invested in oil companies as a percentage of the rest of the market is at a record low. And we're now seeing production, the shales in the US starting to roll over. We've seen some of those companies indicate that potentially they're reaching peak production. So all of this points to supply issues over the next few years, and that'll drive the price of oil higher.
That seems to be the key takeaway, doesn't it? That oil prices are going higher. Maybe a good time to fill up your car. Let's have a look at the market leaders on a flat day. It's all about these uranium players. Boss Energy up 4.5%, also had that update on its Honeywell mine. Deep Yellow up by 4.2%. Now, I know I've said this a few times, but I find it really interesting. Quite a few brokers, and I just had Will Griggle from Climb saying to me as well, Ampol is one company because of its refinery margins that could benefit a lot if we do see this disruption to global oil supply, which we're hoping won't happen, but Ampol is up by 3.1%. All right, let's have a look at the laggards in today's session. It was a lot of these gold players, so West African Resources, Ramelius, you had Minres as well, and a lot of the iron ore players coming under pressure. And I haven't been able to work out why Lovisa is down 5.1%. Mark Gardner and I were talking in the ad break, and we just think it's probably because it is one of those stocks that is thinly traded, but no real news as far as I can see. Send me a message if you think I'm wrong. I know a couple of you love to do that. Let's have a look at the small cap leaders. MTM Critical Minerals up 15%, Cettire up by almost 14%, and to the point that Jonathan and Mark were making about having a look at some of these silver players, Silver Mines and Unico Silver were higher. To the downside in the small end of town, Brockman Mining off by almost 12%. So tonight, of course, it's all about the Fed. The US central bank set to make its interest rate decision. And then, of course, the key point is what Jerome Powell is going to say and whether he sounds dovish or whether he is concerned about global inflationary pressures. US housing starts and building permits as well. Starts expected to fall 0.1%, permits up by 0.6%. Tomorrow, we get pretty much the only key economic data that we've had all week, which is the labour force numbers for May. Around 20,000 jobs expected to be created, and also population growth for the December quarter. So expecting to see about 1.7% in terms of population growth. Not sure that we're keeping up with the housing building to meet this population growth. All right, we are seeing a flat end to the market as we continue to monitor what is happening in Iran and Israel and ahead of the US central bank decision. Tonight, 4 a.m. our time, we'll get it. I know you'll all be getting up and setting your alarm clock. We'll be there a few hours later from 9:45 a.m. Eastern with the Global View. Enjoy your evening.